Ladies and gentlemen, it is fucking go time. Okay, I don't even care if YouTube demonetizes this video because you're not supposed to say the F word in the first 30 seconds. Let's fucking go, baby. Okay, Tesla stock was up close to 4% today. Elon Musk has purchased Tesla shares on the open market. The largest insider purchase, one of the largest insider purchases of any company in the history of forever, as really, this is a solid signal of the future and his confidence in Tesla. Now, we discussed on Sunday how something big was going to come. I honestly, like, if you would have asked me, was Elon going to buy $1 billion of Tesla stock on the open market? Is that the reason why the stock went up a lot Thursday and Friday? I probably would have said it's unlikely because this is a very rare thing, okay? Elon last purchased Tesla stock on the open market almost 6 years ago. But this really solidifies a lot of what Tesla is striving for in the eyes of institutions. Now, I think the move today, only about 4%, is misleading in the sense of we rallied Thursday and Friday on this news as well. We didn't know the news existed, but institutions did. Okay, institutions knew exactly why they were buying Tesla on Thursday and Friday. Now, Tesla stock closing above $400 per share is big from a psychological level. You're breaking out to a new range, okay? And almost at the higher end range. We really need to close above 420 to enter like the higher threshold range. But we are now firmly in this breakout zone. And here in this video, we will discuss what this week means in terms of the first Fed rate cut, which is going to be on Wednesday. Is this going to be a negative, positive event? How am I looking at this? And maybe how you should be looking at this as well. There's some facts we can't deny that September is seasonally a very weak month, and stocks have done well heading into the first Fed cut, which could, give you a little bit of cooling off pressure. We'll discuss that here in today's episode. We also have a clip from CNBC. It's about 4 minutes long where they are discussing Tesla, Elon purchasing stock, and how the business is quote unquote right on track. Now, I think something has really shifted recently ever since Elon's compensation package, okay? Because Wall Street was not looking at Tesla as an AI company. And today, and since the compensation package, they have really been forced to reconsider Tesla, not as an auto company, but as an AI company. So, ladies and gentlemen, the work is cut out for us. We also have economic data coming out tomorrow morning. I will share the importance of that in today's episode as well. Hit that like button, subscribe to the channel if you have not done so already, and check out that link down below in the description of this video if you want to come join the trading community. Obviously, don't be a jackass. Seriously, like, if there's one thing I have to tell you, do not be a jackass. You're going to see this return up 194.5% year to date. We have, I believe, a winning strategy to really take advantage of AI at the baby stages like we are at today, okay? But if you join this group and you do not put in the work, you do not follow up on the news, you just blindly invest in stocks that I invest in as I send out alerts, like, you may or may not make money. You may lose a shit ton of money. I am subject to lose my ass if I am wrong, okay? Do not put your fate on someone else's investment decisions, okay? You need to understand the companies you're investing in, because you could have a stock that does really well and then it has one bad day, boom, you sell out because you get all scared. Next day later, stock has another huge day. I've seen it happen before. And then you kick yourself, you're like, oh my gosh, I would have made XYZ amount of money, and then you end up losing money, okay? Again, portfolio is up 195% year to date. Let me know down below in the comment section if there's any funds that have a better performance than this. I don't think there is any other fund out there on Wall Street that has over 195% year to date gain this year at least. So I think we're the best performing fund of all time if we were categorized as a fund. Just put that out there. But if you guys would like to join it, check out that link down below in the description of today's episode. Now, first things first, I want to start this video off with the clip from CNBC and what Wall Street is saying about Tesla stock right now. So take a listen.
5 straight days of gains for Tesla, and our next guest doesn't see that rally ending. Let's bring in Paul Sienna, head of technical research at BoFa Securities. Paul, so the technicals suggest to you that this stock still has room to run from here.
Absolutely, they do. Over the last couple of years, Tesla's share price was forming a very nice triangle pattern, which resolved to the upside late last year. And since that peak in late 24, it came back down, retraced part of that, and found a lot of support and formed a smaller bottom pattern that says, you know, the bigger picture upside story is still intact.
And how much higher is that upside based on what you see? $700, and if so, when?
Yeah, so our bigger picture target from that long triangle pattern over the last few years does measure to about 700. And given the size of that consolidation, taking roughly almost 3 years, we tend to use Fibonacci ratios to project forward when that could occur. And a few different measures say as early as July 2026, some linger into the first quarter of 27.
I mean, Paul, I'm sure that, this particular pattern was not the same setup as past times when Tesla has had one of these runs. But if I look at a 5-year chart of the stock, there have been a handful of times when it really accelerated to the upside and put in a pretty serious peak. It hasn't spent much time above $400, really only a couple of months since first getting there a few years ago. So what would you look for to suggest it's getting overheated? It seems like the trend this time is just now turning as opposed to peaking.
Yes. I would agree with that statement wholeheartedly. And I think the first thing we can look for is new all-time highs, right? We're really not in a secular bull market, let's say, for Tesla's share price until it's well past $488 a share, which was the prior peak. So, with the move that's happening this week and over the past couple of weeks, in forming smaller bottom patterns that complement those longer-term charts you've mentioned, Mike, I think the shoe fits that, yes, that $700 target is still well in play.
And in terms of the broader market, Paul, how are we set up going into the Fed meeting, going into the second half of September here? Obviously, clicking to new highs. Market's not really kind of doing anything wrong if I just eyeball it. But what can we expect in terms of how it might trade in relation to the coming period?
Sure. So we've had upside targets on the S&P this summer of about 6,500 to 6,625. So I see the equity markets in a mature place, having reached these kinds of targets. So one of the things we advocate for is if you are long and have been long, to think about maybe hedging some of those longs in the options market. If you're in the position where you think the S&P is going to 7,000 and maybe that's approximately where it peaks out, well, then you have yourself a very convenient strike price to think about playing with. I'm a little concerned going into the Fed for a couple of reasons, Mike. One, because the last 10 days of September are notoriously and seasonally bearish. They're the worst 10 days in the market for the year. And actually, September 17th is the 10th day before month end. So it's perhaps just a coincidence, but we'll find out if some of the bearish seasonals come back after all. I'm also a little concerned about some of the breadth measures that we track, like the advanced decline line on the NYSE stocks is not broken out to a new high, even though the S&P has. The percentage of stocks in the S&P 500 trading above the 50-day moving average is still consolidating into a narrowing range, which means it's diverged from new highs. So there are a lot of those kinds of divergences still present as we get to a mature technical target area. And I think about hedging some of those longs and being responsible with that side of the portfolio.
So a couple of things there. Holy shit. I can't believe Bank of America just said that about Tesla, that Tesla is going to $700 per share, that they think this rally has many legs higher from here. Now, keep in mind, institutions, major banks, they don't tend to be like super positive on Tesla to begin with. So like just that comment, $700 in and of itself is like 75-ish% upside from here. And what they say could only be like a year. Now, as I've said before, if things go flawlessly next year, you're going to be over $1,000 a share. If things go mostly correct, you're going to be $700, $800, $900 a share. So that's on the low side of what I would project for next year. But I mean, hearing a bank say that, like Bank of America, just puts it into context how much Wall Street has recently flipped to become more bullish on this stock. Now, what he also said was the last 10 trading days of September are the worst 10 days stretch during any given year. And that lines up exactly with this Wednesday. Now, as stocks have done pretty well, recently, don't be surprised if you do get a sell the news event, if you do get stocks taking a little bit of a breather after the Fed, okay? It's kind of like, again, NVIDIA has a run up into earnings, and then NVIDIA gives you the typical like beat, raise, whole shebang, typical NVIDIA earnings. What happened last time around? NVIDIA sold off like 2%. It didn't collapse the stock. We recovered to hit new highs on NVIDIA. Like it was a minor speed bump. And I think that's what the knee-jerk reaction could be like for the stock market following Wednesday's Fed decision. I don't think it's an event you really have to hedge for. I don't think it's going to be like a major correction event. But if you wanted to throw a hedge or two on markets, I wouldn't blame you. I might be looking at some of the premiums myself to see what the prices are. If the price is right, then I will look to hedge. If you want to come see any of those trades, check out the link down below in the description of this video. But it's not something I feel the need like I have to, right? I think rate cuts and starting of rate cuts with docile inflation and a relatively okay economy is a recipe for a year-end rally. October, November, December, I still believe are going to be one of the best 3-month periods we have ever seen in recent history. And I think next year is going to be one hell of a year to be long this market. Now, tomorrow we have very important economic data as well with retail sales month over month. This is just going to tell us, how is the economy doing? Is the economy good? Is it bad? How are consumers? Are they still spending money? We're expecting positive 0.3% on a month over month basis. Last month was positive 0.5%. So that's an okay number. If last month's number was positive 0.5% and you're doing a month over month comparison on that, 0.3% is not terrible. Now you will get export prices month over month, import prices, retail sales excluding autos, which is expected to be a little bit stronger than last month. Last month was 0.3%. You're expecting 0.4%. You'll get industrial production, capacity utilization, manufacturing production month over month and year over year, the NAHB housing market index, as well as a 20-year bond auction. All of this, most importantly, besides just telling us how the economy is doing, how the consumer is doing, it will feed into a new GDP projection for Q3. So the latest estimate was on September 10th, about 5 days ago, at 3.1%. As we get more economic data for the current quarter, these estimates change. So what is the data tomorrow, or how does the data tomorrow, I should say, change the estimates for GDP? That'll be important. And then really tomorrow, and the first half of the trading day on Wednesday is all going to be about potentially hedging for the Fed. I think everyone's going to have the same idea here, hedge for the Fed. Like, even though we're getting a rate cut, I think people are pretty bearish heading into that rate cut. So it also wouldn't surprise me if stocks went up on Wednesday. That's where you're in kind of a weird dynamic. It's not like everyone is bullish on rate cuts. People are like, okay, you should probably hedge the Fed. Like, everyone's saying the same thing instinctively or intuitively. I've learned in my 8-ish years investing in the markets, when everyone is expecting one outcome, it never happens. So if everyone's expecting a sell-off after the Fed, you may not get a sell-off. Now, I think there's some people that are bullish on this, cut from the Fed. You have seasonals. Again, that makes things a little bit weird. I just really think you should be prepared for anything to happen. You should be prepared for the Russell to go up 3%, NASDAQ to go up 2%, S&P and Dow to go up 1.5% on Wednesday, or you should be prepared for indexes to fall 1 to 2% on Wednesday for no reason at all. And you can't really look into it too much. It's not going to change the end of the year rally, whether we get a rate cut and stocks go up or down. Rate cuts, for this matter, are bullish. With the economy strong, inflation tame, doesn't matter how the markets react. So there's also other things going on, like the looming government shutdown, the Trump tariff case going on in the courts right now. That's also, both of those things are creating a lot of uncertainty. Then you have Trump that says maybe we shouldn't do quarterly reporting. We should do bi-yearly or biannual reporting for the markets. That's creating a little bit of uncertainty as well. So there's some other things going on in the background. TikTok framework deal was reached today. I believe China probably secured a slightly lower tariff rate. That could be positive news if that were to theoretically come out as well. So we'll see what happens. Definitely going to be some developments, and it's going to be a pretty hectic end of this week, to say the least. But tomorrow, it's going to be a big day. And honestly, give it up for Tesla. Give it up for Elon. They really did this. So hit the like button, subscribe to the channel if you have not done so already, and check out that link down below in the description of this video if you want to come join the trading community. Have a great rest of your evening, and I will see you in the next one.